Welcome back to Market Call tonight. All right, Natalie is on the phone now in Toronto. Go ahead, Natalie.
Hi, thank you so much for taking my call. Mr. Burrows, I asked you a couple of months ago, and I didn't follow your instructions about the defense space in the United States. I believe you recommended at the time Lockheed Martin. It's gone up quite a bit since then. Am I too late to enter? And if I am, please, can you give me a different name, or should I stay out of that area altogether? So
Sure.
Thank you so much for answering my question.
Natalie, thanks so much for calling. Your comment was, we talked about it a few months ago. In fact, I think that we've been talking about the defense sector since 2014, and this is the epitome of the type of sector that we try and find where there's something changing for the better. You can get an acceleration in cash flows, which means not only do you get growth in your earnings and cash flow, but you get a multiple expansion over time, because investors start to pay a higher and higher multiple as it becomes more and more predictable. Defense spending around the world is growing after about 10 years of declining as a percent of budgetary spending in the US and in other countries around the world. This is a really neat industry because not only do you get long life contracts where you get lots of visibility, but you also have stuff inside these companies that they never tell you about until they sell a product. It's like a giant skunk works. They're constantly developing these top secret things, and the next thing you know, they've got a multi-year program to supply it to one of the major governments. So we've talked about Lockheed Martin, we've talked about Raytheon, we've talked about Northrop Grumman, we've talked about several companies in this group, and I continue to really like it. You know, we had early this week the Saudis talking about a $110 billion defense deal. This is something that the U.S. is exporting to the world. Whether it's a good thing or a bad thing, it's a great business. So I continue to like the group. I'm going to talk about one of these names today as a top pick. And I think that you're going to see Japan, Europe, many other parts of the world continue to ramp up their spending, NATO in particular. And so this is a sector that has a long sort of tailwind behind it.
All right. Mark is in Vaughan, Ontario. Go ahead, Mark.
How are you? My question's on Blackstone Group. I picked it up around 28, 29 when it got hammered. Nobody wanted it. Looking at it, it looks like it's trading at 9, 10 times next year's earnings. It's paying a pretty sick dividend. So I'm just wondering your opinion on Blackstone and a target on it.
Sure.
Thank you.
Mark, within the financials sector, asset management is a sector that we really particularly like. You know, the characteristics of the industry are that once you're managing the assets, you get recurring revenue for a long period of time, so long as you do a good job managing the money. Blackstone, of course, has about 25% of the money that they manage in hedge funds, and the balance is largely in private equity and alternative assets. These are areas that investors around the world have been growing their interest in. The Saudis just made an announcement they're going to add $20 billion to investment. Happens that Blackstone's going to manage it. So these are big, chunky assets. I think it's a great business. And if you think financial assets in general are going through a period of revaluation, which we believe that can go on for a long period of time, this can continue to be a very good business. Stocks just made a new high. The relative price performance versus the market is improving. So if you like the sector and you like the company, and the financial characteristics are sort of good getting better, I think this is something that you can own. And use a stop loss, stay in it as long as it works.
Okay, Kevin in Kingston. I like that alliteration. Go ahead.
Yeah. Thank you for taking my call. My question is on the Bank of America. It has been struggling lately at around $23. I know you recommended it in the past, but I'm afraid that I've heard other analysts, particularly on BNN, that say that we are at the end of the business cycle. And so I'm a bit hesitant on getting into the market. Do you agree with that, Mr. Burrows, that we might be at the end of a business cycle and that maybe I missed the boat on getting in on U.S. financials, particularly Bank of America? Thank you very much.
Kevin, I think that's a great question. And I'll say off the top, no, I don't think this is the end of any business cycle. When you've gone through 15 or 18 years of up and down markets, like the U.S. market has, people through their experience start to look for the next major problem very quickly. And the toughest thing in a bull market is actually to stay invested so long as things continue to work. If you took a composite of the top 20 markets around the world, so the top 20 biggest equity markets, in the last 3 months they hit a new all-time high, taking out highs from earlier in the decade. So I always look at, in a sector, are the percentage of companies doing well expanding? Are more and more doing well? That's healthy. So if you took all the stock markets in the world, if more and more are performing well, that's a healthy market, not a deteriorating market. When we look at earnings accelerating over the last 3 quarters and earnings estimates accelerating, that's not a deteriorating market. So look, things move up in the market and then they do one of two things. They pull back in price or they go sideways for a while and bore you to death until they're ready to have their next move. And the banks started to rally. Bank of America was at $12 in June of last year. It rallied to $25. It's okay for it to sit and rest for 2 or 3 months. In the last 2 quarters, they've had great earnings increases. Their book value is growing north of 15%, and there's no sign that this is coming to an end. And if you believe that we are at early stages of a long-term rising rate environment, this is a great thing for banks. So I frankly think that there is a 5 to 6 year period in front of us where banks in general are going to have a tailwind from rising interest rates, which means they make a little more on their deposits, and it's an attractive place to be. And in June of this year, we're going to hear from the U.S. government as to how much capital they can return to their investors, and it is almost certainly going to be more than they did last year.
All right, we have to take a short break, but we'll be back with past picks. Stay tuned.